actually giving remarks this afternoon because we've got some exciting both numbers and plans to announce. And we're going to be joined by the first deputy mayor, Sheena Wright, to do so. So unlike last year, I'm not going to talk long this morning because I'm excited for those remarks at lunchtime. And I get the incredible honor of having a fireside chat with Ursula Barnes. So you'll want to come back at noon to hear all of that. But I just want to say a couple quick words of welcome. It's so great to see so many old friends and people I haven't gotten to meet yet in the room, because this conference is all about growing our team and making sure we have on that team, in our staff, in our managers, in our partners, the best possible talent from every corner of the marketplace. Because that's how we deliver best-in-class results, and that is what today is about. So if you already manage for us, will you raise your hands? Because I want to start by thanking. All right, we got a ton of great managers in the room. If you'd love to be a manager for us, but you aren't yet, will you raise your hands? Awesome. It is great. You're in the right room. We're glad you are here. It's a big team already, though, so I want to say thank you to the folks that really drive it and make it work from the inside. And that starts with the trustees of the 5 funds that we have, most of whom are folks elected by their labor unions, the folks who won these pensions and are so thoughtful about working with us to manage them in the best possible way. So we start by saying thank you to the United Federation of Teachers, because we're in their house this morning. And we have our teacher trustees here. Will you guys stand up so that we can thank you, Tom and David and Linda? Thanks to the 3 of you for being here. We really appreciate your partnership. And I just think this is like a good place to ground us, because it is the fact that these folks who teach our kids every single day, right? Like, what's more important than making sure our kids have a good education? And the facts that the folks who do that are then represented on this board that make sure they have retirement security. That's like a sacred covenant that the city of New York is making with its people, like the families that are going to get their kids educated in those schools, and then with the teachers who do that work, and then with a vision of a long-term future for all of us to thrive. And that's what we're grounded in, and the work to make sure we get those best-in-class returns by being as inclusive as possible is the vision that the trustees share and that we share. Let's see, I saw Liam Kavanaugh from the firefighters here this morning, so I know he's here. Do we have any other trustees from the other funds with us? Oh yeah, great. So let's have all the trustees just take a stand so we can say thank you to all of them. We've got 5 funds: NYSERS, BRRS, fire, police, and teachers. We are so grateful for the chance to work with all of you. Then there is a big staff team, and I'm going to hand it off to 2 of them in just a minute. But you could see this morning everybody downstairs at the badge table and that's done the work to crunch the numbers, to build the plan we have today, to build the event we have today is here. So let me ask folks from the controller's office staff to stand up together here. Thank you. All right, let's give a big hand. Hopefully you know a lot of this team already, and you're going to get to meet asset class heads, and hopefully you signed up for some of the speed dating sessions, and you'll attend the breakout groups. I want to say thank you to the folks who planned today's conference especially, and that includes somebody you're going to hear from in just a minute, and we'll talk about a little more: Taffy Iodelli, Kate Visconti, Alia Latif, Elizabeth Monterosa, and Shaq Cheney Field. So please say thank you to all of them for the hard work organizing this conference. And it's now my pleasure to introduce you to 2 people who are really our leaders in this work. The second of them I just mentioned is Taffy Iodelli, who just had started a year ago when we had this conference. So some of you got to meet her last year, but she hadn't yet had time to put her imprint on this work. And over the last year, she really has. And I think you'll see what that has meant. And as you talk to our investment staff, you'll see that the ways that she's working with them have really pushed us forward in powerful ways. And Taffy, I feel really lucky and grateful that you are here pushing me, pushing Steve, pushing all of us to give us the tools to do this work well, to introduce us to partners who will help us do it, and to pushing us to recognize that it's critical. So give a round of applause to Taffy. She has really done great work. And it is now my pleasure to introduce our Chief Investment Officer, who also many of you have gotten to know, who hadn't been long in the job when we stood here a year ago, and who also now has had the chance with a great team in his office to put his imprint and their imprint on this powerful work. Steve Meyer, before here, was at State of Connecticut. Before that, a long career at State Street. Somebody with a great vision of the marketplace and really smart about our investments, and we're engaged in strategic asset allocation. So he's really thoughtful about the core questions of how we invest. But what I've been so excited to see is how he invests in and builds up our people. Because what's really critical in a shop like ours is to make sure that the 130 folks we have in the Bureau of Asset Management, that our asset class, our deputy CIOs, our chief strategy officer, our asset class heads, all our investment officers are working together as a team, are getting the support that they need. It's a group of people, all of whom could be making a lot more money, to be honest, if they were sitting in the other seats in the room. Some of them have been in the private sector. Every one of them could be, and with full respect for all of you who are, the set of folks who choose to come and do this work on the public side for those teachers and firefighters and cops and other city workers. It's beautiful. We feel really lucky. And Steve's work to pull you guys together to be an even stronger team, I just feel really lucky and grateful for. So please join me in welcoming to the podium the Chief Investment Officer of the New York City Pension System, Steve Meyer.
Good morning, and a warm welcome. It's thrilling for me to be here. And as Brad suggested, it's been over a year since I last did this podium. It's been over 16 months since I've had the privilege of being the Chief Investment Officer for the City of New York's pension plans. And I do really greatly appreciate the trust that Brad's put in me in terms of my leadership role within the Bureau of Asset Management. So thank you. And thank you all for making the trip, for being here at our annual Diversity and Emerging Manager Conference. It's really important work. This is a great opportunity for everyone to network and meet each other and spend time. My team and I will be here all day, and I think there's an event afterwards as well. And as Brad indicated, there's going to be some more exciting announcements later in the afternoon. A couple of things. I also wanted to thank, before we get into the meat of things, all my colleagues in the Bureau of Asset Management for the support, the hard work that they've done. This is really a lot of work that goes into pulling off these conferences in terms of the material and just making sure we've got engaged people that are on the dais, and we'll actually be on the panel discussions for the various events. So thank you. Special shout out to, again, those three people that Brad mentioned, Taffy Odello, who's been fantastic to work with and really has provided leadership. Our Chief Investment Officer. Kate just got a promotion. Our Chief of Staff and Office of the CIO member, Kate Visconti, and again, Shaquana Cheneyfield has done just yeoman's work in terms of pulling this together. I oftentimes, at my age, fall asleep at my desk in my office at night, and when I wake up, I don't know where I am, and I go to leave. And it's oftentimes after 7 o'clock, and these folks are usually there working. So these are not 9-to-5 jobs. And while I appreciate Brad's comments about it, that my team could get jobs in the private sector, I really wanted to dissuade them from thinking along those lines, because the work they're doing is just much, much too important. I also want to thank all the trustees, and Brad, you had them stand up. They have an enormous responsibility in terms of serving the best interests of thousands. Actually, it's close to 800,000 pension beneficiaries and pension benefits rely on them to do their job. And it's an enormous responsibility. And we always have to remind ourselves within the Bureau of Asset Management and within the general consultants and the specialty consultants that we all do great work, and we all love the thought process we go through. We make recommendations. The trustees ultimately make the decisions that what goes into the plan. So it's a really important role. And I'll talk a little bit about some of the other things we've done in terms of really supporting the trustees in terms of getting them the information they need to bring them up to speed on some of the things that are new in the marketplace that we can leverage. Lastly, I wanted to thank all the plan consultants. I can see a few of them out there. My eyes aren't that good, but I can see Bud, for example, because he's prominent. But the general consultants for the 5 plants, the specialty consultants, the engagement we've had has been wonderful. And we want to thank you for that. Also, all the asset managers, many of who are in this room today, for the great work they've done. They support our efforts to maximize risk-adjusted returns for the 5 plans. And it's been a wonderful outcome. It's with the help of everyone that I just noted that we actually produced strong reports for fiscal year 2023 that ended June 30th, whereby we delivered 8% annual returns across the 5 plans, which is a great outcome. Now, granted, it's off of a very challenging 2022, but still a good effort. I'd also say that as the end of June, our assets under management in aggregate were over 253 billion, and we continue to hope that that continues to move in an upward fashion, notwithstanding challenges in the market, but certainly a nice pool of assets to think about and deploy in a prudent and smart way. Before I get into a couple of the comments I want to make, I was thinking about, well, I thought about a bunch of things, and I got on ChatGPT and I asked it to write me a story about a golden doodle that picks stocks, and I was going to use that as an example for innovation. And it turns out it's a great story, but it was like 500 words, and we don't really have that much time. But I thought, in terms of what I think about emerging and diverse managers and what Taffy thinks, and that's really important stuff. But I wanted to be able to provide more context and perspective. What's the rest of the Bureau of Asset Management think? So I sent out a note and I asked people to give me the first word that comes to mind when they think about emerging diverse managers. And there's some overlap. Again, we have over 100 people, but I'll read some of the results. Some of them are interesting. So innovative, that actually ticked a lot of bells. Ambition, hungry, entrepreneurship, nascent, and that was 2. So we at least have 2 people that have liberal arts backgrounds. Alpha, grit, perseverance, nimble, differentiated, opportunity, developing, driven. And this one's one of my favorite. And I don't know if it's someone that's really an outside of the box thinker or they simply misunderstood the question. Puppy. Diversity of thought hyphenated. So there's always one in the crowd when you ask for a 1-word answer, they give you a 2 or 3 word that's with a hyphen. So interesting. Possibility, strategic, resourceful. The next one is really interesting. Now I added a hyphen for this individual. American dream. And what's interesting about that comment, it comes from someone, there's a very senior person on our investment team that happens to be foreign born. Relentless, capable, tenacious, eager, indispensable, leadership, and finally, value add. Now, I think all these qualities are exactly what you look for in top performing managers. And we're so grateful that so many of those who embody these qualities are here with us today. So again, a warm welcome, and I hope you get a sense for this is not lip service. This really means a lot to us, and we really think that there's a lot of great things that can come from these activities. Now, from a portfolio management standpoint, and I always have to bring it back to that, our diverse and emerging manager programs precisely align with our portfolio objectives and our fiduciary responsibilities. Diversity actually leads to diversification. It delivers potential alpha generation for the portfolios. It improves risk management, again, through those uncorrelated, unique revenue streams. It encourages innovation. And lastly, it positions us to have access to great managers in the future. And we expect that many of the people that are represented in this room today, if they're not great managers now, they will be at some point. Our diverse and emerging managers programs have delivered alpha for portfolios or benchmark outperformance across the plans. And we're committed to expanding our leading programs and strategic partnerships. And we have many strategic partners in the room today. And where we don't have strategic partnerships and we're doing things directly through rigorous analysis and thoughtful recommendations to the plan trustees. Now, our investments within diverse and emerging managers have already grown since I've been here. I'm not taking credit for it. It's really been the work of the village in terms of really getting things done. Our assets under management for diverse managers have actually gone from 11.65%, or the dollar amount 16.8 billion at the end of 2022, to 19.5 billion today, 12.86 at the end of June. So, I mean, it looks modest. There's a lot of assets that go into that. And again, the mixed challenges, because we don't stay with a manager because they're emerging or diverse. We stay with them because they're delivering performance for the funds. And I think that's a great step in the right direction. And I know Brad's going to talk a little bit more about things that we can do to expand the program down the road. We've also continued to have strong execution with diverse and disabled veteran-owned brokerage houses. This program is actually overseen by Mark Pendarvis, working with Taffy. And here we execute on a non-directed best execution, best efforts basis. And we work very closely with the asset managers to make sure that we're giving a good look to those minority-owned and diverse brokerage firms as well. So again, it's another part of that process where we embrace the folks that we work with and deliver hopefully great outcomes. So thank you, Kate. This slide is a snapshot of our aggregate assets under management, again, as of the end of June. And you can see it's pretty balanced, and heavy allocation of public equity under John Mercerberg. It's been well managed. It's been a great performance driver. John would correct me if I said this incorrectly, but I think it drove 90% of the returns in fiscal year 2023. A subtle nod, a confident nod. But these are actually going to change. So we had something, if you're not familiar with it, in the legislation called the Basket Clause. The Basket Clause is legislation that was signed into law by Governor Hochul at the end of last year. And we used to work off of this, we still work off of this decades-old legislation that had a legal list of the things you could buy. And whatever didn't fall on the legal list fell into the prudent investment basket. And that's why it's called the Basket Clause. The Basket Clause at the end of last year was increased from 25 to 35%. So it actually gave rise to an opportunity to engage with general consultants, specialty consultants, and most importantly with the trustees about revisiting and reevaluating the strategic asset allocation for the fund. So we're largely almost through with that process. 4 of the 5 plans have approved new strategic asset allocations. The other one I think will be done within a matter of a couple of weeks. And we'll start implementing some of the changes probably as early as December from one of the portfolios, but more likely in the public asset classes in January, February, and perhaps March. In the private assets, it'll be subject to pacing plans that occur over a much longer period of time. And we'll talk a little bit more of that in a moment. The beneficiary asset classes that are actually going to be receiving assets in this reallocation or private equity, private credit, infrastructure, in some instances, core and non-core real estate, but we're also combining those 2 critical areas into one. So John Blusack and his team have more flexibility in terms of how they can allocate across those opportunities. In one case, hedge funds is going to see an increase, as well as high yield strategies and investment grade corporate strategies. I'd say most of that's probably coming from public equity, although we'll still maintain a 40% allocation of public equity under John. Additional priorities. So there's a lot going on in the Bureau of Asset Management. First and foremost, we have something we refer to as our Strategic and Tactical Accountability Review, or our STAR project. This is really working with our trustees, working with consultants. We actually hired a world-class, world-renowned, well-known consultant to engage with us on this. And that work has actually started within the last 2 weeks. I think there's been several interviews already with our trustees, which is a logical starting point. But the idea here is to figure out how can we more efficiently support customization across the 5 plans. And as you meet the trustees of the 5 plans, they're very unique, they're different. All the plans have their own risk tolerances, their own preferences, they have different funded ratios, they have different performance needs. Certainly it's an interesting process, but we want to figure out how can we do a better job doing that. As Brad said, attract and retain and develop diverse talent. It's all about the team. And I'd like to recognize the members of the Office of the Chief Investment Officer, which is, if you guys can stand, I can see most of them sitting right in front of me. We've got Anash Kajela, who's also Deputy Chief Investment Officer, who runs PE and a lot of other things. Petra Nikolova, who's also a Deputy CIO, responsible for infrastructure and other things, and work as partners with me. We've got Allison Hirsch, who is actually our Chief Strategy Officer, who has a great knack for telling me when I'm wrong. There's two people in my team that love to give me different perspectives. Allison and our Chief Risk Officer, Ed Berman. And I'd like Ed to stand up wherever he is as well. He's over in the corner. He's playing hard to get. As I said, we've got our Chief of Staff, newly promoted to Chief Investment Officer, Kate Visconti. And last but certainly not least, Lynn Fleischman is our Chief Operating Officer. And she's basically doing the job of 3 people for the last year. We're still looking for some talent. So if you have talented individuals, please send them our way. We also continue to work on fully integrating our ESG. We've got John Adler, and I'll ask John to stand up. He's right here as well, who's doing a great job. But we're part of the challenge is, and again, from an investment standpoint, from a fiduciary standpoint, ESG drives long-term value creation. These aren't social programs. And looking at investment, so John's actually a member of the investment committee in addition to overseeing all of our ESG activities. ESG is a great lens to look through to mitigate risks, reputational risk, litigation risk, reputational damage, potential for other challenges. So we think that ESG is certainly important. We think it's critical in terms of our risk evaluation and driving long-term value. So again, another one of those key initiatives. We also have our Thought Leadership Speaker Series, which is something we put in place early on when I joined, whereby we have Zoom calls every Friday morning from 10 to 11 o'clock, and we have the benefit of having fantastic speakers in the industry. So all the trustees and Bureau of Asset Management people actually dial in for these. And I'll give you an example of the caliber of people. So I've actually had the privilege of interviewing a former vice president. We've had heads of many of the firms that are represented here today present as well. And actually, I'm very excited. Tomorrow, I get to interview Carlyle co-founder, philanthropist, writer, and media mogul, David Rubenstein. So I'm actually have the privilege of interviewing him tomorrow on the Zoom. So for those trustees that haven't, or band members that aren't aware, that's tomorrow at 10. And we think that's a great way to communicate, to keep ourselves and our trustees up to speed on what new developments in the marketplace. We've also developed BAM University, the Bureau of Asset Management University. Kate and others and Allison with her did a great job. We had a 2-day event, 2 Fridays in a row, all-day events where we had speakers from the Bureau of Asset Management. The idea was to kind of open up how we do things, how we think about things, how we support and service the trustees. And actually, the culmination of that event was we had former U.S. Treasury Secretary and Obama Chief of Staff, Jack Lew, before he was confirmed as ambassador to Israel, actually spoke and came and met with us in person, which was wonderful. Lastly, we are continuing to evaluate our portfolio construction process. We're putting a lot more quantitative rigor into that, and that's the brainchild of Ed Berman. And I've worked with people in the past that have really great and deep skills in risk management. Ed is second to none. We're lucky to have him, and he's doing a great job, but we want to have more of a quantitative-based analysis process that we go through when we make investment decisions. And lastly, certainly not least, and I know Lynn would kill me if I didn't really talk about this, because there's so much work that goes into our custody RFP, which applies to actually 4 elements, right? And I think that the responses are due on the 4th of December, but that's custodial services, it's securities lending capabilities, it's FX execution, as well as alternative asset servicing. She's mouthing it for me, so I'd get it right. But there's a lot of work getting done there. So, I mean, I'm going to leave the podium now and turn it over to Taffy, but I do want to emphasize there's so much going on. This is a great opportunity to interface and interact with ourselves, the people within the Bureau of Asset Management, the trustees, and I hope to have a chance to speak and meet with all of you. And in the meantime, enjoy the day. And thank you so much for coming.
Good morning. I'm going to ask anyone who's standing in the back, can you take a seat, please? We have seats over here, unless you really want to stay in the back, but we have seats. So I do want to thank the comptroller for being here and for being our fearless leader in this work. It has been an exciting first year at the Bureau of Asset Management, and I'm really grateful for Steve's leadership, for Allison Hirsch and John Adler, who I report to and who fight alongside me when it comes to this work. I do want to thank all of our asset class heads who also have been a big part of making sure that we analyze all of the opportunities for folks in the room. I also want to thank our trustees who've been a part of the process. And I don't want to steal Brad's shine. He's going to give you what our new program is going to be later this afternoon. But it has just been a pleasure to work in this office. And I'm not going to get emotional. It really, really has. I put my heart and soul into this work only because I started in this industry almost 20 years ago and there wasn't much diversity, and came back and I'm like, we haven't improved as much as we should have. And Brad was committed to it. And I said yes. And we have a team that's committed to it. And so I'm grateful to be here and to be able to advocate for diverse and emerging managers in this space. I wanted to highlight some folks who probably don't get enough recognition, and those are our emerging manager program partners, GCM Grosvenor, Neuberger Berman. Please stand up if you work for those firms. BlackRock Infrastructure, Vivium Capital Partners, Leading Edge Investment Advisors, Legato, and Exponence. These folks are I always say they're like the hands and feet that our team don't have to be able to do the diligence and find the up and coming talent. And they have made themselves so available to me when I have requests for data, requests for information. Hey, can you explain this process? And that level of collaboration is what has helped and will continue to help us forge forward in terms of, growing this program and really having a strategy that takes us from, the 12.68% to something much greater. So thank you again to all of you. And they also help to coordinate the panels that you'll be sitting through later today. So very, very grateful. I cannot go forward without thanking Kate and Shaq. Those two, just Rose, can you please stand, Kate? Let people see you. And where's Shaq if she's in the room waving in the back? Thank you. I also want to thank Jasmine Reynolds from GCM Grosvenor. When I attended their conference and I saw how she executed, I'm like, I need you. Come and be a part of this. And most importantly, our events team, Liz and Alia and her entire team, the technology team, Jason and Mikkel, they're probably not in the room. They're probably taking care of other things. But thank you. This could not happen without them, and I'm grateful. So, okay, those are all my thank yous. I wanted to just highlight that last year, Steve put this up. I was 3 weeks in, and he goes, okay, these are your marching orders. These are the 4 areas that I need to see some progress. And with the help of everyone that I said thank you to, we've been able to make great progress. And so first off, in terms of looking at the definitions of emerging and diverse managers, we are looking at, for the public markets, making sure that we increase the AUM for managers from 5 billion to 10 million in international and fixed income. And for small cap, increasing that from 2 to 5 billion. Again, this all needs approval from our trustees, but these were all, I've presented this to our trustees already, so they're aware, but we wanted to share that with you. And then in terms of ownership for private markets firms, we've been at 25%. But we're looking at increasing that to 33% to be more in line with the industry, as well as being able to count economics. Where the dollars are flowing are important. So that 33% economics and carry, we're also going to look to include that. So the next area was really reviewing the program asset class by asset class. So again, thank you to the asset class heads. We spent a lot of time this summer really looking at what are the areas for growth and opportunity. And so if you look at where we are in terms of total exposure, we've grown. Again, Brad's going to give you a lot more data there, but we've been able to see this year, and kind of dig down a bit further on the next slide, you'll see that we've been able to capture the actual demographic data for all of our managers, large and emerging. And it's been eye-opening for us. Oh, Kate, can you go to the next slide? Thanks. Is it out of order? Maybe it's the next one. There we go. Okay. So this was important for us because in this industry, we just like to say MWBE and give a number, and we don't know what really are the underlying firms. And so this data, from the help of the managers themselves, our fund of funds, have been able to show us where are the gaps, where can we be more strategic and find firms that are a good fit for the portfolio, and where we might have blind spots. So that was very important to us. The third point was making sure that we figured out a way to set aspirational goals. If we're not setting metrics, the work won't really get done. And so Brad will announce that later. But for us, we really did have to work alongside everyone, all of our program partners. I do want to shout out the consultants who also chimed in on the aspirational goal setting process. And we were able to take that information, and I went to each board and presented them with, these are some of the strategies that we believe can take us from where we are today to something more substantial down the line. So thank you again for that. Now, one area that we did realize in the portfolio, this is just one gap, is that women are extremely underrepresented in the portfolio. And so this morning, we had the women from PE Win. If you're here, can you stand up? We had a breakfast this morning. I think yes. We had a breakfast this morning, and our asset class heads in PE and private credit and infrastructure were there to talk about our program and share with them how they can get involved. So we want to make sure that we're doing the right things, but we're using the data to inform us. And we're also looking at our data capture. We do an annual survey to all of our managers, and we were able to get this year, I'm really impressed, about 192 managers to respond. And that makes up 95% of our total assets under management. And Jimmy Yan, our director of ESG, Jimmy, if you're here, can you stand up? And Tara Mae Smith, our ESG integration officer, they really led the charge on this. And this is, for us, a very important way for us to see what you all are doing in terms of your DEI practices. And we're also going to turn that litmus test onto us and analyze what we're doing internally. We started this year the Equity and Culture Committee. Lynn Fleischman, can you stand up? Lynn is my co-chair, and Kate Visconti has helped staff that. It's been great work having a group of folks. There's 18 volunteers, which includes Steve and Allison and some asset class heads, to really talk about what are the things we can do to retain top talent? What can we do to promote diversity in all aspects within our office? So that's been another, area that I'm very proud of. So I'll close with this. This has been a journey. This year has been a journey, and I'm really excited for the opportunities that you all in the room are going to have. You can go to my last slide. So if we have anyone who actually paid attention in Sunday school or Hebrew school would know that this is David and Goliath. And I believe that our diverse and emerging managers, the community, can sometimes be perceived as the David, right? But I'm confident that what's in your slingshot is what makes you stand out, why you've consistently outperformed in our portfolio, why we know it's important, why we're going to our trustees and saying we need to grow this program. And so lean in to these areas where you're able to tap unserved markets, where you have unique deal flow. That's what we want to see. Continue to be that unique you. And we're here to support it. We want to see more of it. And so with that, I hope you have a wonderful conference. Please connect. Please make sure that you give us feedback. It's important that we know that we delivered on this the way that you expected. And please come to the reception from 4:30 to 6:30 later on and network with us. So let me give you your marching orders for the rest of the day, because we are running behind. We have our first breakout session with Ask for Asset Classes. Private equity stays in this room. Everyone else goes up to the 19th floor. We have real estate, infrastructure, and brokerage opportunities. If you're not in any of those sessions, feel free to network, in the back or upstairs. But please have a wonderful conference, and thank you all for being here.